UPS also out with its first quarter results. The earnings and the revenue both beat expectations. UPS is not going to be giving annual guidance this year. They say it's just too difficult to try and figure it out, but they will be providing an outlook for the second quarter during its conference call that's coming a little later this morning. In the meantime, that stock is up by about 1.5%. Joining us right now is Jonathan Chappell. He is Evercore ISI transportation analyst. And I'm sorry, Jonathan, is it Chappell or Chappell?
It's Chappell.
Chappell. OK, thank you. Let's walk through these numbers, what they mean for UPS, and then more broadly, if we can read anything into what it means for the broader economy. First of all, it looks like they did pretty well for the for the first quarter. For the second quarter, we're waiting to hear the guidance. What do you think overall?
Right. So it was a little bit of a surprise to the upside for the first quarter results. Most of it came from the top line in the U.S. domestic business. It had to be a volume beat because revenue per piece, which is a proxy for yield, came in a little bit below expectations and a little bit below the guide. Margins were slightly better in U.S. domestic, but overall, core operating income, adjusted for all their charges, was about a $28 million beat to the street. That's only about a third of the upside to EPS. So a lot of it came from below the line, from a lower tax rate. So, how do we filter that then into 2Q or even the rest of the year with the guidance effectively pulled? I think the uncertainty plays a massive role here. January was better than expected from a volume perspective. I think we saw a big shift down in demand in February as some of the uncertainty started to come to the fore. And then March was probably, just as uncertain. So, from all the other companies we've had across the transport world, railroads, truckers, whether it's TL or LTL or intermodal, it sounds like April was very soft as well. So again, we can't really say what they're going to talk about 2Q, but it feels like from a volume and a revenue perspective, uncertainty and shipper paralysis is probably a bigger risk than any cost upside that they may provide from their network.
OK, they are talking about how they're going to cut 20,000 jobs because of these economic worries. They're going to be closing 73 leased and owned buildings by the end of June. They're looking for more buildings, potentially for additional closures on this. And they're continuing to evaluate the impact of whatever the changes in volumes are on their air network. So are those the moves you'd like to see management making?
Well, they're the necessary moves. And remember, it's not just about tariff uncertainty. Back in January, they announced that their largest customer, which is Amazon, was going to take more than 50% of their business off of the UPS network in the following 18 months. So there was a large cost response necessary for that loss of volume from Amazon. We think it's about 55% of the Amazon business over that 18-month period. Now you have, questionable macro backdrop. You do have this shipper uncertainty. We have this reciprocal pause. So there is this potential maybe for one last pull forward of goods that may benefit them in the back half of the quarter. But I think as we sit here today and you think about a lot of supply chain paralysis, shippers sitting on their hands, not knowing if they should move their manufacturing to other parts of Southeast Asia, or if they should just, kind of wait and see where things go over the next 60 to 90 days. But yes, UPS needs to be nimble. I think these cost initiatives they announced are positive. But the top line ultimately will determine, the EPS path going forward. And until we have much greater certainty on what shippers are going to do, how they're going to react to these tariffs, I think there's just a lot of question marks about the growth path.
Jonathan, what would you do in this situation, just as an investor? Do you buy here? Do you steer clear to get some of these questions answered?
Yeah, I steer clear. I mean, this is a stock that's really underperforming, and you're showing it's up 1.35%. It was up 4% when the earnings first came out, just because, the top and the bottom line beat. But there's a lot of question marks here. You have the macro, you have potential recession risks, you have the tariff uncertainty, you have the Amazon drawdown, and, 55% by the second half of 26. I think the biggest tail risk is what happens to that remainder 45%. Does that eventually leave the UPS network? So just a lot of potential headwinds. Again, I think they're doing all that they can, controlling their controllables on that cost side, 20,000 headcount reductions, the 73 facilities. That helps, and it helps provide a little bit of a buffer. But again, the top line is going to ultimately determine the outcome here. And there's just so many question marks for an industry that's kind of already under some structural risk. Given, Amazon not just leaving UPS's network, but building out so they touch every zip code within 24 hours in the next year or two. There's just a lot of headwinds here, a lot of uncertainty. We're still on the sidelines.